Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We are restarting here our work in 2025 with gold, silver, copper, but it's not a direct mining company. It's Osisko Gold Royalties, the company you know extremely well. I'm a shareholder of the company, and I'm really happy that we have for the first time Jason Attew here, the new CEO of the company. Jason, welcome and Happy New Year. How are you?
Happy New Year to all your subscribers, yourself, Jochen. Really pleased to be on this afternoon.
Yeah, thank you very much for taking the time, as I know you guys are always very busy because you have a large company to run. I would love to go directly into medias res because you just released your preliminary Q4 2024 results, and it looks to me like that you are hitting your guidance quite well.
Yeah, no, thank you for that. And so real quick, as I think everybody knows, Osisko Gold Royalties is a precious metals focused pure play royalty and streaming company with senior quality suite of production and development assets and a peer leading gold equivalent ounce growth trajectory. You're absolutely on point, though, Jochen. We had a strong finish to 2004, for which we ultimately earned close to 81,000 gold equivalent ounces in aggregate, which came just slightly above the midpoint of our guidance of 77 to 83,000 gold equivalent ounces. If you look really deep into the details for the year, we generated just over 262 million Canadian dollars in revenue. Our revenue in Q4 was higher than certainly Q3. There were a handful of reasons for this, and so most of it had to do with timing. Our Q3, if people go back and read our financial statements, there are a number of gold equivalent ounces that were earned but weren't sold. So there's a timing difference. And we effectively ended the year with zero inventories. So again, really good result for our company, really good result for shareholders. And so again, we're quite pleased that we did meet, we basically came in slightly higher than the midpoint of our guidance, as I said, and that sets us up incredibly well for 2025.
Absolutely. And what I really like is that you have an 86.5% cash margin, which is outstanding. If I look at your competitors like Franco-Nevada or Royal Gold or Triple Flag, etc., they are all well below. What are you doing different than the other guys? I mean, those are all also nice companies, aren't they?
Yeah, look, obviously the royalty sector is a very, very good sector to be invested in. But you're on point again, close to 97% cash margins. The reason for that is we are very royalty heavy focus or royalty heavy company vis-a-vis our peers. And that's anchored by the Canadian Malartic, one of the most profitable mines here in Quebec, which we have a 5% NSR. And how we got this royalty, just so, and I think most people have the context, but the company is a fairly new company. It just celebrated its 10th anniversary, which was founded as a direct result of a takeover defense whereby it's on a 5% royalty on the Malartic mine. So it's not like you can go out and buy these type of assets and any sort of acquisition that we're certainly engaged in and our peers are engaged in. So and again, the reason we have the 97% cash margin is we have that important Malartic asset that represented over 30% of our cash flow in 2024, and it represents about 25 to 30% of our net asset value go forward. And another way to state this is the cost of our gold equivalent ounces earned are peer leading. Those peers that have more streams and royalties will have a higher cost base to achieve their gold equivalent ounce production and growth profile.
Okay. So 2024, all together, say aside of Victoria Gold and Renard, you are satisfied?
Look, I think it's probably appropriate. Yes, very satisfied, but it's probably appropriate to do a quick year in review because, as you mentioned, this is our first time having a conversation, and delighted to be having a conversation. I've been the CEO now the past 13, 14 months, and when I joined, I recognized that there were 4 discounting factors that were really impinging on the company in terms of share price performance and reflecting the true fundamental value of the company, its growth opportunities, and I said ultimately its stock price. The first one was the business model. I mentioned the founding some 10 years ago. The Osisko Group at the time was attempting to differentiate itself, and it embarked on what it was known as a generator model by buying development mining assets and attempting to create value by advancing them through the development cycle, and for which the end game would be to sell or operate the assets while at the same time retaining a royalty or stream on the asset. Admittedly, again, I was watching from the sidelines. It was a very interesting concept. However, we have empirical data that has led to destruction of shareholder value, and mainly because there's a very different skill set involved in advancing assets through the development curve, rather than being a capital provider to finance high quality assets. So when I arrived, really simplified the business model. All we do now, as I said at the outset, we're a pure play company. All we do now is we're a provider of capital in the form of royalties, streams, and high quality assets to management teams who we believe have exceptional technical acumen in the best jurisdictions. The second discounting factor, again, there are four of them that I saw, is Osisko Gold Royalties had a poor governance record. We really improved this significantly by the elimination of the executive chair. We removed all the related party transactions and went through a painstaking process to untether ourselves from the Osisko group of companies. We are now 100% independent. There's zero influence by these historic companies and personalities who ran them. I have a lot of time and respect for those folks, but again, they're in the development process and stage, and that's a very, very different skill set. The third discounting mechanism or factor was the debt load that the company had when I first joined. So to provide everyone context, about 14 months ago, our net debt sat at over 300 million. Today, our net debt's around 50. We, in fact, moved into a net cash position late last year. However, we did buy 2 new royalties and streams at the end of last year that had an outlay of about $67 million US. But the point is, we've got tremendous flexibility now and improved our balance sheet, which enables us to execute it on accretive transactions. We have $750 million revolving credit facility, about 135 million of that's drawn. So we've got 600 million of liquidity. And really, we can source transactions that move the needle with our shareholders and stakeholders within a 5-year outlook.
That would say that's real firepower.
In real firepower. Again, we get involved in every one of these options that you see printed with the Wheaton Precious and the Francos. And it's difficult as a competitive sector, but we're certainly in the flow. And I'd say the last factor was, again, just getting a permanent CEO. And I'm delighted and honored to be that CEO that really the board chose to drive the company forward as we effectuate on deals with high quality arm's length counterparties and incrementally grow our cash flow per share.
Okay, super. So you said you have a net debt of $50 million. So you are not counting your investments as an asset?
We don't count the long-term of that. We have 2 main investments, equity investments. The first one being Osisko Developments, and the second one being Mac Copper. And those are roughly worth, somewhere around 170 to 190 million Canadian dollars, depending on the day.
Absolutely. Okay, super. No, I like that. That's a very conservative approach. Okay, let's come a little bit more to 2025, because you brought out on 23rd December, you had a news release that you have done the acquisition completely with the Gibraltar Silver Stream interest, and you closed also the Tigeranga royalty acquisition. How would that impact positively your business in the next years? How do you see that?
Yeah, it's a great segue, because we will be putting on February 19th our 2025 guidance as well as a revised 5-year outlook. So the transactions that you're referring to, the one that is immediately accretive and will start helping us is on Gibraltar, the transaction that we did, $12.7 million with Osisko. We have a silver stream there, and they consolidated the rest of their 87.5% interest to 100% through a transaction that they did mid-year. It was just a natural extension for us to provide more capital for them as they require capital to build out their asset base. So it was a nice little tuck-in, again, logical with a counterparty that we know very well. We're very constructive on the Gibraltar asset. It's going to be in operation for a number of years, but again, it immediately hits our cash flow. So that was a great transaction to get done. The strategy that I brought in when I came in some 14 months ago is we have to do transactions that are cash flowing or near cash flowing. By near cash flowing, I mean within the 5-year outlook. And the Dalgaranga transaction that we did, and I closed just before Christmas, that we announced just in our third quarter, it exemplifies that. This is an asset. It's run by Spartan Resources. It is the best gold development asset, in our opinion, in Western Australia. It will be up in production within the next 24 months, is our belief. And Spartan Resources, since our acquisition, it's a 1.8% gross revenue royalty. Since then has put out just a number of really good news releases. They'll be updating or providing a feasibility study this half of 2025. And we expect that there'll be a final investment decision by the Spartans board this year. So again, it's something that we want to do transactions within our 5-year outlook. Is something that we've had our eye on. Our technical evaluation lead, Guy, has had his eye on this asset for the past 2 years, and we're very fortunate that we were able to acquire that royalty, and which gives us incremental exposure to Australia. As most of your audience would know, Jochen, we've got really good exposure in Australia, mainly through the MAC Copper asset called CSA in Australia. Through the MAC Copper, we have a 100% silver stream. We also have a copper stream there. We really do like Australia as a jurisdiction. And so, one thing that I didn't mention earlier, but one of the things that really does differentiate Osisko Gold Royalties from our peers is our geopolitical makeup of our royalties and streams. Over 80% of our royalties and streams come from Canada, the US, and Australia. Obviously, doing Dalgaranga helps that 80% in terms of net asset value. Our second most important asset is called Mantos Blancos, which is run by Capstone Copper, and that's located in Chile. So if you include Chile, which we think is a very, very good jurisdiction, a long history of mining, if you include Chile in that 80%, you'd actually get up to 95%. So from a geopolitical perspective, we're certainly peer leading. We're in countries that you can sleep very well at night without even thinking about expropriation or any sort of other social unrest or issues with the fabric of mining culture and understanding. So we will continue to try and source acquisitions in countries like Australia, but we're very, very pleased with the Dalgaranga asset that we picked up and be additive to our portfolio go forward in the next 24 months.
Mm-hmm. Okay, super. Before we come to the further growth path, I think you are super on the way here. But we had also questions from viewers, and they were asking us, hey, what happens with your royalty? Renard shut down, the Eagle mine, is not producing, it's completely suspended. So what happens there? Let's say somebody buys Eagle and says, okay, full rehab, and we restart production. So what happens with your royalty?
Yeah, so firstly, I'll just quickly deal with Renard. Renard is a diamond mine here in Quebec. It's being shut down just because the economics were way too thin. So we've completely written that asset down to zero. There's no expectations we're going to get any gold equivalent ounces. In fact, the consortium or the group that owns the asset, including ourselves, sold an option to an Australian lithium company that's looking to use the infrastructure that was built up to support the diamond mine. So there might be some residual value, but again, it would be up to the margin. with respect to Victoria, that was arguably the one blemish that we had in 2024. People weren't aware the Victoria Gold's Eagle Mine had a heap leach failure, for which the asset has been shut down. The Victoria Gold's gone insolvent, and so the process there is the fact that there's no obviously production happening. There is a receiver involved. The Yukon government appointed a receiver when they took the asset over, which is PricewaterhouseCoopers. And so their focus and this happened mid-June, the heap leach failure. Since then, they've been focused on containment of the heap leach as well as remediation or recovery. And so we're of the belief, though, that again, because we hold a royalty, because it's a secured interest, it's registered on title. It is our view, and we have legal opinions of the fact that we effectively own 5% of all the in situ gold that's associated with the project. So when the project, and we do believe it will be up and running again, we just have no visibility in terms of timeline. There's close to 2.5 million ounces of understood resources and reserves at the Eagle Mine in Yukon. So it is a very important asset base. And so when let's say the environmental incident is fully evaluated, the receiver has not as of yet provided an analysis in terms of the root cause that's ongoing right now. And so we do believe that when PwC in particular starts to look at monetizing or looking at asking other mining companies to come in and bid on the company, and just so everybody is aware, there was quite a bit of debt in the company. So there was all the Canadian banks had a facility with Victoria Gold. So there's a fair amount of debt in front of it that would obviously have to be negotiated in any sort of insolvency process or procedure. But our point is, we believe it's an important asset to the Yukon. If the root cause analysis comes back and essentially it doesn't completely sterilize the existing heap leach, I think there's a lot more value there. Even if it does get sterilized, there is a secondary heap that's being designed very nearby. So there is a potential for a new operator to come in and start back at the heap leach operation, but we just have zero visibility. What we've learned through there's a monitor website. What we've learned through that is they're making good progress because there are a number of non-core assets within Victoria Gold, some royalties and some options that at least from what we can see from the monitor perspective, these assets are now held for sale. So that's the first start of the process in terms of trying to regain or trying to get some of the capital or the money back from that asset. So look, the point is we still have, as I said, title. We've got a secured interest. We're clearly following what's going on with the proceedings. It is our belief, as I said, that the asset will be an operating asset again at some time, whether it's 2 years or 6 years. Again, we just have zero visibility on it, but we do expect that at some point we're going to start receiving cash flow. So there's still some residual value associated with that investment. And just to provide you some context, it was a $98 million investment that the company made in 2018, and we've recovered about 82% of that investment. So there is an 18% that we still have to recover, and we certainly see at least 18% of that value coming, but we just have zero visibility in terms of the time frame for which Eagle will be operating again.
Yeah. Okay. Super. If I look at your growth for the next, let's say, 4 years, you want to go to 120,000 to 135,000 geos by 2028. Yeah, that's a bit the outlook. So that would mean from today that you have to grow by 50 to 65% approximately.
Yes.
If we calculate it like that, so that would mean at least 10,000 geos per year.
Yeah, look, it's obviously not a straight line growth, Jochen, as you can appreciate. In fact, the biggest step change for the growth profile that we publish, and we will be updating this again on February 19th, is in 2025. And the reason for that is we've got now 21 assets under production. There's 3 new assets that are going to help our contribution in 2025. The first one being Tocantinzinho, the asset that G Mining, I'm sure a lot of folks would know. We'll get a full year of production on that royalty. The second one, we made an investment in Cardinal, on the Nandimi Cardinal, which is an asset in Ghana, which Chinese Shandong operates. They poured their first gold in November, so we expect to get a full year of our royalties on that asset. And the third one being the CSA mine that I mentioned earlier, McMullen's Mac Copper. We started receiving our copper stream June of last year, so we'll get a full year of that copper stream. Those are drivers of 2025 growth, but the biggest driver actually has to do with their second most important asset called Mantos Blancos, which Capstone Copper operates. They've been on a path for the past 18 months to get what's called a phase 1 expansion complete of 20,000 tons per day at the Mantos Blancos asset. They haven't been successful actually getting that. We were expecting that to happen previously, but it looks like, the light is at the end of the tunnel. They've actually been doing some really good things at site. We were at site just before the new year clicked over. And so what we've seen and what Capstone has actually put out is they've had, over 25 operating days now at the nameplate capacity of the 20,000 tons per day. That is quite important for us. And just to provide, again, additional context, is we have a 2-month lag on that stream, the silver stream there. And so we won't see that benefit even from those 20 until 2025. So look, that's a very important driver for our growth in 2025. And in fact, there's another expansion that John and Gashel, the CEO and COO, respectively, has talked about on their conference call, where they think the optimum run rate throughput would be anywhere between 27 and 30,000 tons per day, which again is a nice incremental uptick for ourselves in 2025. Beyond that, the longer term growth, again, big step change in 2025. We have a number of assets that are, 50% of that growth profile are with assets that are already in production. So these are just expansions, extensions. The biggest one that I would mention, I'm sure your audience is very familiar with, a fantastic operator called Alamos at the Island Mine.
Oh, yeah.
We have a royalty at the Island Mine, and they're going through an expansion. They just put out a release yesterday, in fact, talking about their 3-year guidance. The interesting thing there, after they bought Magino Mill to really free up the throughput, because they obviously have a mill now, and they're not mill constrained, as they can push more volume. Volume or the grade of that material is higher. In addition, our royalty goes from 1.38% to 3% as they get deeper. So over the next 3 to 4 years, our gold equivalent ounce royalty will triple to quadruple over the next 3 to 5 years, as I mentioned. And so those are the assets that are already in production. The 2 assets that are pure development assets, we have a lot of confidence in to get to that, 40 to 50% growth probably. You mentioned the first one here is in Quebec, where I am right now, called Windfall, which Goldfields consolidated last year from Osisko Mining, as people know. So it's a really good, well-known operator with, obviously a deep financial backing. So again, the worry is when you have single asset companies, that, obviously they can get pinched in terms of capital right at the end when they're finishing a build. That obviously we have a lot of confidence in, and so super high grade, really good asset here in Quebec. So a lot of confidence in that. And the second one, that's purely a development asset, is an asset called the Taylor Mine in Arizona, Hermosa project, which is operated by South 32. South 32 is a senior diversified company, again, that's got all sorts of financial wherewithal. They spent close to $550 million over the past 12 months committing to this asset. So again, we really do believe that's going to come in within our 5-year outlook. And that is effectively it in terms of, the pure development. So the risk arguably of getting to that 40 to 50% with all the assets I talked about, we think is quite minimal.
I would say that's all absolutely realistic. So 2 important questions for shareholders, which I always get when I talk about Osisko Gold Royalties. First of all, when will you raise the dividend again? Secondly, will you buy back more shares?
So great question. Again, I think everything, and I know we talked about, and I know you're a macroeconomist. So again, a lot of our business and the fact that I believe not enough CEOs in the precious metal sector speak about the macro factors happening around the world that have a direct impact on the commodities that underpin our business and that underpin obviously the return of capital that you're talking about. And was specifically with gold, and one might imply that I'm talking about my own book, but I think there are a lot of gold bugs and a lot of people that are quite constructive on this webinar to gold. I would argue one just needs to follow the smart money. Some of the most successful business people, portfolio managers and traders, people like Paul Tudor Jones, John Paulson, Paul Singer, Pierre Lassonde, remarkably coalesce in their opinions that higher inflation for a sustained period is inevitable. Higher inflation is really good for gold. You layer on the fact that central banks still want to diversify away from the US dollar in the face of what people are calling the dollar weaponization. Chinese consumers are still very concerned about their economy, particularly real estate and the safety of the banking system. The US debt situation, the Fed will have to take, in my opinion, a more accommodative monetary position as the US economy starts to slow. The global geopolitical unrest, the reverse globalization themes, all support a very constructive gold tape in the months and years to come. This is great for our business. This is great for the gold sector. This is great for the returns of capital. So you can think, again, we're just in the midst of our budgeting cycle, Jochen. You can think that what we'd like to do as a company, provided that we, again, all have the view that we're going to be in a constructive gold environment, that once a year, and we did it last year, there was an 8% increase in our dividend. We look at our dividend. Our rule of thumb is to pay out approximately 25 to 30% of our operating cash flow in the form of dividends. And so given, again, what I've just conveyed around constructivity around gold tape, you can think there'll be an increase this year. With respect to other methods of return of capital, we do have what's called a normal course issue bid here in Canada to buy back our shares. We can buy back 9.9 million, or about approximately 5% of our float. We did briefly dip into buying some shares back last year, specifically after the Victoria Gold incident, where we thought we were unfairly penalized. That recovered very, very quickly. So we have to be very careful. We can't just go out and be buying shares back when we think, the only way it's accretive for shareholders and the owners that are in this call, if we do it at a responsible price. So we did buy some shares back last year. We will continue to try and be opportunistic if we do see a dislocation in what our asset base is versus what we believe are fundamental net asset value. We will buy back. We are restricted, though, in that we can only buy a certain amount of volumes on our Toronto Stock Exchange for which per day and daily volume basis, for which restricts us to some degree. And obviously we have a number of blackouts. But I think the general theme is, if we can provide, and I'm a big shareholder of Osisko Gold Royalties now, we are very focused as a management team and the board around metrics like cash flow per share metrics. A big accolade, continue to be a big accolade of how Agnico's run their business. So we're very focused on per share. Why that matters is if we can get all shareholders, including ourselves, more concentration on a per share value, per share basis by buying back shares, more concentration on assets like Malartic, we'll absolutely be opportunistic and do that.
Super. What is really funny, because you are a big holding in the Global X Silver Miner ETF, and I'm a shareholder in that too, because I think it's perfect asset diversification. And as far as I know, you are doing like 25 million ounces silver through your streams per year.
Yes.
What's your view on silver? I have done last week a very big silver presentation where I featured your company also. And because I'm super positive on silver, how do you see now the seventh year approaching the deficit? How do you see silver by itself as an industrial metal? And maybe also some comments on copper, because I could imagine gold, we both agree completely, it will go up further with that inflation scenario, right?
Yeah, look, obviously silver has a bit of a different dynamic to gold, but does follow some of the same themes or trends because it has really good industrial uses. And look, silver is very important, as is copper, but silver is very important around critical minerals and the path to electrification around the world. It's got also some very unique industrial uses. We do, as a company, as you said, we were included in the silver index because we made the index providers aware of the fact that we're approximately, right, as 2024, we're just high 20% in terms of our silver production, but we'll actually move in to around 35% as our portfolio continues to benefit from the silver streams that historically the company has done and some of the transactions I mentioned from last year. And so we are actually a pretty, if you look at the components of that silver index, we're one of the, in terms of the silver ounce or the silver exposure, we're one of the higher ones. So we're really pleasing that we're picking up some of that interest and demand. But silver, again, has got some really good industrial uses. It also has the additive impact of following, again, everyone follows the gold silver ratio. It's something that we're very smart on. We continue to be smart on, again, given 30% of our cash flows are in silver. We have to come up, because we report on a gold equivalent ounce basis, we have to come up with what we believe our gold silver ratio will be. So we'll track it in our mind, the uptick in terms of the gold fundamentals I mentioned, underpinned obviously by the industrial uses in silver. So very bullish on silver as well. Switching to copper, and obviously at the beginning of this year, we've seen some significant uptick. It was quite disappointed, in my opinion, in my view, from a 2024 perspective. Yeah. The fact is, and most of what we're trying to do, and some of the more successful transactions that this company has done, including, as I mentioned, the CSA, is funding copper companies with a byproduct such as silver that's not necessarily core to their business. And so a lot of the acquisitions that are in flight that we're working on right now are with copper companies. And so why you didn't see some of those transactions get printed in 2024 is there wasn't enough confidence, and arguably, again, it was disappointing from just a pure copper price perspective from last year. The thematic, though, around the electrification, the decarbonization, has not gone away. The fact is you're going to need copper for everything that, again, countries have mandates in terms of again, decarbonization mandates that they all have. What we're hoping to see, what we'll likely see in 2025, is a number of these copper assets actually get greenlit by boards, actually seeing some support with respect to the copper price. It was hard late last year, so we had a lot of transactions that were in the queue when there was more optimism, let's just say, in the copper commodity. And that kind of fell away by the second half of 2024. I believe that 2025 copper will be a very important commodity. And so hopefully we can get the confidence back with that group of investees and boards, because copper projects, as I think you know, these are multi-billion-dollar projects. If they're pure, if they're pure grassroots or greenfield operations, and the inflationary aspects that we've seen certainly in the last half of 2024 do give boards pause of actually making their final investment decisions. So hopefully the inflation will come down. Hopefully there'll be some tailwinds around copper, and that then enables us to do more financing transactions. A lot of these copper deposits will have byproducts such as gold or silver associated with them that we can go out and help finance and create more certainly create more copper around decarbonization.
Absolutely. And I think the world really needs those mines. And as far to my understanding, I think we need one oil to go every year just to keep the pace with the normal growth, which is not happening. So we are depleting like crazy. And same thing with silver. There are no new large silver mines on the horizon, really. And so from that perspective, I think you guys are in the right metals, right jurisdictions. You do the right things. Jason, thank you very much. The last 35 minutes, they're really fantastic. I'm a happy shareholder, definitely. And I love to hear that you will probably raise again the dividend. That's music in the ears of investors. And I wish you well. Thank you very much for your valued time.
Appreciate your time, Jochen. Happy New Year to all.
Thank you very much. Yeah, ladies and gentlemen, that was Jason Attew, the CEO of Osisko Gold Royalties. And you heard it. Everything is really going the right way. This is how we like it. Aside of Renard and Victoria Gold, this was a little bit of a short impact, but a great opportunity to buy the stock cheap. And as you see, diversification is key. And this company is really fantastically diversified. It's in the top tier 1 jurisdictions in the world. And we talk about gold, silver, and copper. Those are the metals of choice you really want to have. And as he said, probably the dividend will rise again. They will buy back some more shares. That's exactly how we want it. And we have also raised our chart targets now to easily 32 to 36 Canadian dollars. Could be in the longer term, easily go to 45 to 50. We are super positive on Osisko Gold Royalties. And if you want to sleep well at night with an investment, you really should consider this fantastic company. Thanks for watching us. Happy New Year again. Bye-bye from Switzerland.